Hello everyone and welcome to the QuickBook tutorials. In this tutorial we are particularly recording the accounting of a Subway fast food restaurant. Until now we have discussed the Excel data sheet which we have collected data from a Subway restaurant. After we have discussed the vendors, then we have discussed the um, customer invoice, and by giving the brief introduction of QuickBook, we have also discussed the items, and with the items we have also discussed the sales tax item and sales tax code. Well, when I was making a video of items, I did not really make any particular inventory item because in the particular video in which we are especially in this particular course of videos which we are especially making for a recording of a Subway restaurant accounting, the inventory of Subway restaurant we do not manage in our QuickBook because the inventory is already item wise inventory is already recording in one Excel worksheet, which is the requirement of a Subway head office. So we have to manage the inventory and that Excel application, and the application which is made, it is in fact Excel worksheet. This is the weekly inventory and sale report. In short, in the world of Subway they call it WISR, 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 weekly inventory sale report. This is the sheet, kind of detailed sheet. Look at this is one page, and if I make it a little bit bigger you will see that in this section the inventory is managed. Sorry, look at this. Here these are the items which are used in Subway sandwiches: tuna, mayo, light mayo, cheese 1, cheese 2, cheese 3, hamburger, and so forth and so on. It's a long list. So this Excel worksheet is sent to the sub-regional office every week, because with the help of this sheet the Subway fast food company based in America collecting their royalties from every Subway restaurant. So look at this. So once the inventory, since it already the inventory is managed uh, in the so detailed manner in an Excel worksheet, and this Excel worksheet is refreshed every week, and inventory is taken every week, and this Excel worksheet is sent to the Subway regional office every week. So the need does not arise that we maintain this inventory then in the QuickBook. Look at this. This is the inventory, and here is you can see that this is the store number is on the top, and look at this. This is the sale, electricity of a week. All these cost items are collected on a week basis, and here is you can see the cost of goods of the week is 31.6%. It is not a correct cost, though the correct cost of a Subway restaurant should be somewhere from 40% or from 38% to 44%. Look at this cost of goods, and here is the royalty. Look at this royalty 7623, and advertisement fund this. These two amounts are, every franchise is bound to this, to pay this amount 7623 and 4288 every week. So since I explained this document to clarify that I did not make the inventory item in this course, and this is the reason that why we did not made the inventory item in the QuickBook, since that we are already making them here. And when we need to close our accounts, so on the month end we take one inventory for the accounting purpose, and that inventory is then provided by the restaurant manager to the accountant, and on the basis of that inventory then we create our cost of goods. We do record our purchases in the QuickBook. But those purchases are particularly recorded in the cash section. Look at this. This is the inventory sets. If I run a quick report of inventory set, you will find out that, for example, I want to see the month of March. Look at this, from 1 March to, let's take it to the 31 March. Look at this. Now here you can see the bread inventory. Bread is purchased during the month of 7,161, and this is an imported meat item purchased 124,270. This is a general entry, and here is inventory other stock. These other stock are the purchases of every day. Like, look at this, double click it and you find this is some vendor, and this we purchased some other inventory item of 11,200. So all these inventories are collected. Look at this, inventory Pepsi are purchase of two, like this little amount. This is the, because of this 47,881, an adjustment is made to this. This is why we have only a purchase of 2,757 rupees. And look at this inventory of some other vendor. Well, the purpose of showing you this report is that we have already a purchases with us, and when we received an ending inventory, then vendor wise we decide the cost of every item. Now look at this sheet, this inventory sheet. This is the month end inventory of the March 2019. Look at those items, the same items which we have once seen in our weekly this report. It is also starting from this tuna item, and the inventory that we have taken on the month end is the same inventory items. Look at this. This is quantity, this was the price of the unit, and this is the amount. So we got our inventory in amount, and these are the parties. Now why do we wrote the party here? Since that we want to know the cost of the items in our profit and loss. So we know, for example, this Swiss company, we know what we buy from Swiss company, so we don't want to see the every item that we buy from a Swiss company and we see the cost of that item. Like we can see it in this sheet here, we can see the items but we cannot see the party, but we can see here the tuna cost. For example, we had an opening of 5 tuna with us, then we bought during the month 2, and total goods available for sale were 7, and on the month in or on the weekend inventory find out that we got in hand only 6. Now this means only one tuna pack is used. One tuna pack is 830 rupees. rupees and the usage cost is 830 rupees. This is the item wise cost. Since that it is very detailed and we do not want to see so much detail in our accounting, we want to see a little bit summary an income statement in order to see the cost, but to see it a summary brief. So we filter this on party, filter, select filter here. Now when you select from here, for example, naan bread, look at this, you will find out that we have only these two bread item in hand. This is the inventory that we got in hand. So when we make our cost, for example, to find out what is the cost of bread, so here is another sheet for the cost, and look at this, here is a done bread. Done bread was opening balance on Feb was 1015, 62,309 purchased, goods available for sale 6324 during the month, and we got ending inventory of 8,176, and the cost of goods of the bread item is 55,148. So I hope you guys got this cost of goods method. This is a particular method that I have used for a Subway restaurant accounting. If we go to our profit and loss, for example, a report, memorize report, profit and loss accumulated by Mohit. I am Mohit and I'm accountant of the company. I have made this report. This is why I have entered my name in this report. I'm going to run this report. It is from 1 March to 31 March. Look at this. These are the installation charges. This is the bank profit. This is the cash sale. This is the Food Panda credit website sale. And this is the credit card bank sale. So, and this is the cost. Well, the cost is booked like this, 63048. Look at this, and if you see here, you will find this 55 and 47. Look at this, which one is matching? 129 is GR meat, 129,833, and look at this, 129,813. It is matching, but after this, we have done some adjustment to these in order to bring things to the normal, to take some leakages and some mismanagement in inventory. These are the correct cost of goods which is booked in the profit and loss. So we can see that in the month of March we got total sale of 1.8 million. We can see that the cost of goods is 1.1 million, and then the rest of the expenses are taken into account. Look at this, we got little loss, 24,560. So this was the reason, and this was the matter of the account, that I did not go in the detail of inventory item when I was making an inventory item. So I hope you guys understand this. They understand me in this, and now you got the concept. For example, to look at this Excel sheet, you can find that your inventory is here, and this is our visor. I'm going to close this. This was the cost of goods per forma. Yes, save it. And this was the ending inventory that we have received from a restaurant. And as you know that this was the sale detail which we have discussed in our previous video, and these are the expenses. So how do we report our expenses? For this we'll have to see an profit and loss account. Once again, we are going to open the profit and loss account. Look at this, profit and loss. Here are the expenses. Look at this. Look at this Scotch Brite. It is a 60 rupees Scotch Brite purchased. Every these paid out are one day paid out are written in 1 day purchase invoice, and then this invoice is paid. Since that these expenses are done in the cash, but we make an invoice, then we received the cash from invoice, and then we paid this invoice. So this way we dealt with all these paid out expenses. So I hope you guys understand this, and I would understand the necessity to make a little bit clarification of an inventory item, that why I did not make in detail the inventory item, since that we do not need it in this particular course material. When I make an inventory required company, and I am scheduled to discuss three kind of companies. Number one, this fast food restaurant company. Number two, fisheries, uh, fish hunting boats, and the business and the profit of that business. And we'll make one such company in which an inventory items are used. For example, an a unit of a textile, or maybe some electronic shops kind of items. So in this particular subway business, we do not need inventory. So keep watch the course material. If you do not get clear in some case, you can write me in comments, and I can clarify the situation. So thank you for watching. Thank you guys for being with me. See you in my next video. Bye bye.